Hello everyone and welcome back to my channel. In today's video, I'm going to teach you how to build a financial model for a Bitcoin mining operation. As a Bitcoin enthusiast, every once in a while I find myself thinking about investing in a mining machine and start my own Bitcoin mining operation. In today's video, I'm going to walk you through how to build a financial model for Bitcoin mining, from a simple payback calculation for a single unit mining machine, all the way to a large-scale commercial Bitcoin mining farm. I'll show you the different steps, considerations, and the strategies to structure a model with 3 different examples so you can better understand the financial dynamics of a Bitcoin mining operation. Without further ado, let's gonna get started. So here we have the basic templates that we're going to use to build the financial model. And for now, we have 3 sheets over here. And by the way, if you'd like to, you can click on the link below and download this start version of the model for free. Okay, we're going to get the 3 sheets we have over here. So the first one is just a cover. The third one, which is the last one, we have our technical inputs or the constants that we're going to use throughout the financial model. Okay, so these are basically days, dates, and months, okay, in some units, okay, that we're going to be using. And all of them already have a name, okay, so I named all these cells over here, so we get to use them in a much better way. And then we're going to have already this simple payback sheet, which we're going to use to calculate the first model, let's call it, okay. And what I'm assuming here is that we're going to purchase 1 unit Bitcoin mining, and we're going to calculate how much time it's going to take us to pay back our investment. So that's basically what we are calculating over here. But before you start filling out the forms and adding the calculations over here, it is important to understand that a Bitcoin or a Bitcoin block is mined every 10 minutes, okay? And as of today, each block has a total number of Bitcoins, which is equals to 3.125 Bitcoin per block, okay? So I'm going to add these informations because they're just over here. And I'm going to say that the block time is 600 seconds or 10 minutes per block. And the reward for each block is equals to 3.125 Bitcoin. Okay, so these are the basic information that we're going to need. And what we're going to assume here, our first major assumption is that we are going to be able to grab a percentage of this reward every 10 minutes. Okay, and how we're going to do it? We're going to see what is the current network hash rate, and hash rate is how much power there is on the Bitcoin mining, on the Bitcoin network mining Bitcoin, okay? And we're gonna compare how much we have against the network, and the percentage of our operation is gonna be the reward we're gonna get, okay? So that's the main assumption we're gonna have. Then we're gonna see how much we're gonna pay for the machine, how much we're gonna incur in electricity costs, and based on this information, we're gonna be able to calculate all the payback periods. Okay, we're going to see the daily, the monthly, and the yearly returns for our investment. So it's a pretty straightforward calculation that you should be doing if you think about buying at least 1 machine to start doing it on your own home. Okay, so let's see first what is the current network hash rate. So I'm going to go back here to my browser, and I have the information just over here. So I'm going to leave these links in the description below, so you can also check for yourself. And if you look at this website here, you can see that currently the Bitcoin hash rate at the Bitcoin network is approximately 706. Okay, I find a bit of different numbers. If you go to this other website over here, you can see it's a bit higher. It says 135 as of March 7. Okay, so there's a little bit of delay over here. Okay, I'm going to use this one here, 760, to start with. So I'm going to go back over here, and I'm going to say that the current network has 760 exa hash per second. Okay, so this is the hash rate of the network. All right, it's going to get the price of the Bitcoin. I think should be around 80,000 now, 86,000. So there we go. So I'm going to put here $86,000, and that's our Bitcoin price. And now we have to decide, okay, which machine we're going to buy, how much hash rate power are we going to have, right? So I'm going to go back to the websites, and I usually like to use this website here, askminervalue.com. I click on Bitcoin, and then you can see like the most profitable machine is for Bitcoin. Okay, let's gonna assume we're gonna be able to buy this machine over here, which is the most profitable. Let's gonna click here and can see what we have. So this is the machine. Okay, I think this is a water cooled machine. So essentially, you have to buy more infrastructure to be able to cool the machine. Okay, so we're gonna say we're gonna pay not the 10,000, but we're gonna pay the 16,000. So we're gonna pay something more, right? So let's gonna say we're gonna pay for this one. We have the price over here. We're gonna be able to pay $20,000. Okay, including all the infrastructure required to yeah, we have here the water, pure water, to cool the machine, okay, which is a pretty important part of the process. Okay, so we're gonna pay in this one here, we're gonna pay the mining costs over here, so we're gonna pay $20,000. Sorry, we have okay, we have as a percentage of tera, we have dollars per terahash per second, right? So it's gonna say it's 20,000. I think that's more or less the price, right? So let's go back over here, and here we have the price dollars per terahash. So it's gonna pay 20. Let's say it's 20, right? Then we have the hash rate of the machine, which is this one over here. It's 860. There we go, right? Terahash per second. By the way, I have this information here is doubled, so we don't need it. Then we're gonna calculate the total mining cost, which is this one multiplied by this one. So I can even put 22 over here just to make it a bit close to 20,000. Okay, so that's a fair price. What do I have next? The mining power, or the miner power, which is 11,000, I think, 11,180. So 11180. That's in kilowatts. So it's going to be 1,000. So let's delete this. It's going to be 111.18. So that's the, gosh, let's divide this. It's going to be like this, 11,000 or 11 kilowatts, right? Now we have to come up with our electricity costs. We're going to say we're going to pay $0.05 per kilowatt hour. And lastly, we have to come up with the mining fees, which should be approximately 2%. Okay, so that's our inputs for the mods. Pretty straightforward. There's nothing here. I think the most important thing is to understand that we're going to get paid every 10 minutes, and the total payment is going to be 3.125 Bitcoin per block. All right, so this is the current hash rate of the network, 706 exa hash per second, which is, and we're gonna get 806 terahash per second, okay? And if we want to convert this number here to terahash, we have to multiply this number by 1 million, okay? So that's how we do the conversion. All right, so let's see. Which percentage, the first thing I'm going to calculate on row 20 is the percentage of the network that we have, okay? So that's going to be pretty straightforward. So it's going to be how much power our machine has, which is this number right over here, okay? Then we're going to divide by what? We're going to divide it by the total network, right? And as I just said, we have to multiply by 1 million, and that's represented by this named cell over here, nil. And I'm going to close parentheses. I'm going to press enter. So we have 0.00011% of the network. So that's how much power we have vis-a-vis the total network capacity. All right. So what's going to be our revenues, including the mining fees? So let's gonna think a little bit and how to calculate it, right? So the first thing is we have to understand what is the total reward per day, okay? Because that's what I calculate here, right? So what is the total rewards per day? So it's going to be what? It's going to be the 3.125 every 10 minutes, right? So basically what I have to come up with is how many 10 minutes we have in a day, right? Or if you think a bit different, is how many seconds we have in a day. And I have this already over here. This is how much. Let me just go back here, Control Z. If you go to the technical, we have the number of seconds in a day, which is calculated over here, right? So basically what we're going to have number of seconds or seconds in a day, right? Then we're going to get this number here. We're going to divide by how often do we get a block. So that's going to give us, we're going to have 144 blocks per day already. Then what else we're going to have to do? We're going to have to multiply this by what? We're going to have to multiply this by the total block, right? Then we have 450 Bitcoins per day, and then I'm going to have to multiply by the percentage of the network we own, right? So basically here is what is going to be our revenue in Bitcoins every single day, okay? All right. Then what do we have next? So next we're gonna can calculate the monthly. So it's gonna be this number here times the days in a month. Okay, so that's our monthly revenue. And here we're gonna have this time days and years. So we're gonna have daily revenue times the number of days in a year, and we're gonna have our daily revenue. Okay, cool. That was easy one. The next one, we're going to calculate the mining fee. So it's 2% of the fees, or 2% of the revenue is going to be in mining fees. So it's going to be this number times this number. And I have named these already, as you can see, mining fees. So I don't need to anchor anything. I just have to Control C and copy everything across. So this is how much mining fees we are pay. I'm going to multiply by -1 because we are paying those fees, okay? So just to be consistent, what's income and what's outcome. And then we just have to add these two things together to come up with the total revenues after mining in BTC. All right? Okay, so let's see how much money we're going to make now if we were to convert the Bitcoin into USD. So we just have to grab this number and multiply by the Bitcoin price. I'm going to anchor. I'm going to press F4 to anchor this so I can copy and paste everything across. And you can see that this particular unit is generating us $15,000 per year, which seems pretty good, right? I'm not sure how much this is correct, to be honest. I think it would pay more than the 18,000 here. We saw some price. If we go back here and if I click here, so most likely to pay the 14,000, we would have to buy these in China, which I'm very far away from, and very unlikely I would be able to get this price. So I would most likely pay something on this order here. Let's say if you are in the US, you would be able to pay around 21,000 plus all the costs for you to do the cooling using water. Okay, so let's go to pay $25 per terahash. I think that's a much more likely scenario, right? So let's go to say 25 here, and there we go. We changed a little bit the numbers over here. All right. Okay, so that's basically the revenues without any costs, right? So now I have to consider the total costs and how we're going to calculate the total cost per day. Okay, so it's going to be basically the electricity we're going to consume, right? So how we're going to do it? So it's going to be equals to what? It's going to be equals to the total mining capacity times the price per kilowatt hour times what? Times the number of hours in a given day, which is 24. And I have already named this. So if we go here and if I select the whole thing and I press F9, it's 24. Okay. So that's how much we're going to be able to incur in costs. I'm going to also have to proper anchor here. So I'm going to do one thing. I'm going to press F4 on cell G4. And I'm going to also multiply by -1 because that's an output for us. And here we go. What's not okay? I have also to anchor the mining power capacity. Now we copy and paste, and here we go. Right. Okay. Actually, here we have to change the formula. Should be this equals times days in a month, and this is gonna be equals to G25 times days in a year. All right. So now we have all the costs. We can calculate now our profit and loss without considering the investment. So it's going to be equals the difference of the two. So we can say this plus this, can copy and paste across. And here we have our profitability. And now we can calculate the payback period, right? So how can we calculate it? It's going to be equals to the mining cost, which I think I have a named cell. You can see that's how much we paid. And I'm going to divide by the total profitability per day. Press enter. So it's going to take 728 days to pay for this investment, okay? Or exactly 2 years. All right, so that's exactly how much we are calculating. I think here I think that's everything is correct over here. And we have basically concluded this exercise, right? So basically, if you were to invest in this machine, you would be able to get your money back in 2 years. The question is now, how good of an exercise this is, right? So how accurate this is, and what are the limitations of this exercise? And I have already put a few thoughts over here, and that's what we have to improve now. So, right, so what is the limitation of this? First, we consider, or we assume, the Bitcoin price is going to be constant over the 2 years, right? So that's the first major assumption that we're going to have. The second one is that the network hash rate is also constant over time, which is not true. So if you go back here, and I think if you click on this over here, and if you see over time, let me just going to make it big, look how much growth has the network had in terms of hash power, okay? So you can never assume the network hash rate is going to be constant. We also have to account for it. Not to mention that we not account for any tax paid. And also another thing too, we don't know, we're just considering this as an operating, we're operating this mining as a hobby, okay? So not as a business, so there's no depreciation, there's no tax, there is no maintenance cost, there is no change of machines, there's nothing in here, okay? It's basically getting one machine, plugging in on the electricity plug, and going for it, all right? And we have no residual value of the machine, there's no debt, there's no depreciation, as I mentioned before. So there's a lot of things here we can improve, okay? And that's the purpose of the second exercise we're going to do. We're going to basically consider at least the change in Bitcoin price and on the network hash rate, because those things are two of the most important variables for us, right? So what if the Bitcoin goes up, but the hash rate goes even more, there's more demand or more growth in the network, right? So these are things that you have to account for before you do any sort of analysis, okay? So I think for if you want to do it as a hobby, just for fun, you can go for it and just do this sort of calculation, but this is going to be far from the real world for you, okay? So let's gonna jump now to the second analysis. We're gonna put this in a timeline and calculate the change in Bitcoin price as well as on the network hash rate. Let's gonna see how to go about it. All right, so next I have a sheet in here where I have the infrastructure required for us to calculate this more detailed financial model, which in this case is going to be a financial model, right? So there's two ways you can go about it. So the first one is just to follow up with me and do everything on your own. Even if you download the free version of this financial model here, of course I'm not going to have this one, but I'm going to give you everything that you need to watch the videos and build the financial model on your own. Okay, so the infrastructure is going to be available for you in the free version. Or if you prefer, you can buy the financial model by also clicking on the link below and get a full version, and you can just go and follow along with the video. Okay, so that's gonna get it started. But before we get to populate the timeline and build up the financial model, I just wanted to show you what extra information I added to the input sheet. So we're gonna go to the input sheet, and the first thing that I added here was a timing section where I added the amount of months we're going to operate for this particular machine. Okay, so we're going to start with the assumption that we're going to be able to operate the machine for 5 years, and the date where we're going to start evaluating our project. Okay, most specifically, this is the date that I'm going to evaluate all the cash flows. Okay, so all NPVs and IRRs, they're going to be evaluated at the 31st of December 2024. Then the extra information I added is the price of BTC increase on average per month. Okay, so the assumption is that the BTC price is gonna increase 1% per month. Next, what I add here is quite an important piece of the information that I'm gonna work with, which is the miner loss of value over time. What that means is we're assuming the machine that we're gonna purchase, the miner, is gonna lose 0.5% of its value from month 1 to month 2, then 2.5% from month 3 all the way to month 8, then 3.5%, 7% all the way through. And lastly, I just added in here the escalation for the electricity price. So we're going to assume the electricity price is going to go up, and the assumption I have over here is going to be 1% per annum. So with this information in mind, let's going to go back to the timeline and start populating it. The first thing we have to do, we have to set up our timeline and the columns that we're going to need for this exercise. Okay, so the first thing you need is to come up with the model start date, or let me see, I think I have already a project start date, which is the 31st of December 2024. Okay, so as you should know, if you have been watching the videos in this channel before, you know that the start date of the next period is equals to the previous date of the end date of the previous period plus 1. Okay, so that's going to be 1st of January 2025. And now we're going to have for each one of the periods which correspond to a column in the time series, it's going to be a month. So what we're going to do here is going to be end of month, tab, start date, comma, 0, right? And if I close it, there we have the 31st of January, which represents a full month. So I can copy and paste everything across, and we have now every month represented by every column represented by a month. All right. So here we're gonna have the month number, which I will start as an input here. Don't like to have inputs on the calculations sheet, but in this case I will have to have anyways because of something we're gonna have to do later on. So this is gonna be 0, and then I'm gonna have that the first column is gonna be equal to the previous one, the previous column plus 1. So this is first period, second period, and I'm gonna copy and paste across, and each one of the numbers in here represent the month of operations. Okay, so now what we're gonna have the total operations length is equals to the number that I just included in the Excel file, which is 6. Enter. And now what we're gonna have here, we should have true if the period that we are is less than this one here, and false it's above, right? So how to do it? It's going to say if what is number above F4 twice to properly anchor the cell is less or equals to the one to the left, and I'm going to press F4 3 times. Then I don't need an if here. I can only have something like this. I can even get rid of the parentheses. So there we go. Enter. Copy and paste. If I anchor everything properly, we do have the proper transition between period 6 and 6.1. Okay, another thing I'm gonna do so that you can follow with myself on your own the model, I'm just gonna I'm just going to copy and paste all the formulas so you can follow up. Okay, so here we go. So we have these formulas already, and each one of the formulas represent on column J, and then just have to copy and paste across. Okay, so these are the four first formulas we have in this Excel file. All right, so the year fraction is the percentage of the year. Okay, actually we don't, let's leave it there. Okay, doesn't really matter. So okay, so how do we calculate it? So how many percentage does January represent in a month, in the year? So that's going to be equals to what? The difference between the end and the start date plus 1. We have to account for an extra day, right? Divide by what? Days and year, which we already have a named cell for that one. Press tab and enter, and that's a percentage. Okay, copy and paste across. If I anchored everything correctly, it should be here. The only thing I want to do now, I want to just start multiplying by the flag, because I don't want this percentages to appear once the project is no longer operational. Okay, so here we go. Then what else? So we have this, then we have the days in period. Okay, so that's pretty easy. It's going to be the difference between this, the end date minus the start date plus 1. I also want to make sure I flag this, right? So multiply by the flag, F4 twice to proper anchor, copy and paste across, and here we go. Okay, then the hours in period, so that's going to be equals to the one above times I have hours in day, not this one here, it should be this one here, and then I just want to multiply by the flag, copy and paste across. This is we have the hours in period, and then we have the 1,000 seconds in period, right? So I also have here we have seconds in a day, right? So basically we have 31 days times seconds in days divide by 1,000, right? Because that's we have 1,000 seconds per period or in period. Okay, so I'm gonna just copy and paste. and everything is already correct over here. Cool. So we get all of our timeline and collapse. The next one, we're going to start calculating the revenues first, then the costs, and lastly the return. So this is the steps we're going to follow up right now. Okay, so let's going to start with, first we're going to calculate how many Bitcoins we're going to mine, or is going to be mined by the network per period. And based on this information, we're going to be able to derive how many Bitcoins we're going to get per period, okay? The most important thing in here is that we have to come up with the hash rate growth of the network, okay? This is the most important thing for this section here, because this is one of the things we didn't have in the previous model, so we have to somehow come up with a way to calculate this forward, okay? But before we go there, let's just going to calculate the total BTC that's going to be mined per period. Okay, so we know that at every 10 minutes, okay, a block is mined, and that each block for now is 3.125 BTC. Okay, so that's what we know for sure. So what we want to have here is how many blocks are going to be mined per month. Okay, so first we have to know how many seconds we have in a period, but this we have to multiply by 1,000. Okay, how many 1,000 seconds, or this is 1,000 seconds, this is going to be seconds. Okay, and then I'm going to divide it by the amount of time it takes for one Bitcoin to be mined. Okay, so that's what we're going to have over here. And the last thing, I just want to multiply by the flag. So we're going to mine 4,400 Bitcoin per period. Okay, that's more or less how it goes. Okay, and again, I'm not checking when the next halving of the Bitcoin award is going to be taking place for now, okay, but it should. But in this case here, we're going to assume it's going to take more than 4 years, or over, it's going to be after we take this machine out of the market, okay, or stop to operate it. Another thing too, I'm going to add the sum here of the whole row, so we can know how many mined Bitcoin is going to happen in the next 5 years. I'm going to press Ctrl D so we can copy the same formula from the one above, okay. And now we're going to calculate the BTC award per block. That's pretty easy. It's just this number over here, F4 3 times the flag for the operations period, which is J5, F4 2 times. And here, oops, not the sum. Here we have to do the multiplication. So we're going to have this 4,000 blocks times 3.125 per block. And this is how many Bitcoins are going to be mined in this period. I'm going to copy and paste everything across. And here we go. And this is the total amount of Bitcoins mined during the period we consider to operate the machine. Now we have to calculate how much we will mine, right? But if you remember from the first part of the video, first calculate how much we mine. We need to understand the percentage of the network that we own, right? Because that's the main assumption, right? And now, because we are considering the total capacity power of the network is going to change, we have to come up with a way to calculate the change of the network going forward, okay? And the way that I chose to do it, it's very simple. It's just a regression line. So what I did, I came to this website here, okay? So we have the address over here, bitcoinvisuals.com/chain-hash-rate, okay? And you can choose here the period of time that you want to make the analysis. So I download basically the entire historical hash rate of the network. You can click here and then you can just download CSV data file, okay? So I did this exercise somewhere in September last year, so that's, I guess, sorry, 2025, somewhere over here, okay? Or actually a bit before, doesn't really matter. Well, September, okay? So I'm gonna go to the Excel file that I have open here, and this is the file that I got, okay? So basically what I have here, I have all the values from 2009 to 2024, and here we have the hash rate for the network, okay? It's just the pure hash rate. So this is to the power of 20, okay? Which gives us the exa hash rate, okay, per second, okay? So that's where we are right now. What I did after, basically, I select everything, I came to insert pivot table, and I create a new pivot table in a new worksheet, okay, which is this one over here. And then what I did, I set my values to be the hash rate, okay, this one here, And if you click on it, choose value field settings, just choose the average. Okay, so that's what I did. I want the average per month. Okay, so to calculate the averages, then I set my rows to be years and months. Okay, and organize my table to be basically like this. What I did next, I can delete this. I select everything. I just press Ctrl A. Everything was selected, and then I press Alt F1. A graph has been created, and I just created a regression line based from here. Okay, the way you can do it, you can click on the graph or right click on it, and you can add trend line. And here we have the trend line. Then you can select over here, you can just trend line options, come here, and I want to see the equation on chart, which is right over here. And I also want to see, let me go back here, click twice here. And I also want to see the R squared, okay, which shows the correlation between your trend line and your data. So right now it's 82%, 0.82. You want this number to be as close as to 1 as possible. Okay, of course, that's going to be impossible, but you can change a few things in here to make it closer. So the first thing I'm going to do, I'm going to set this not to be a linear, but to be a polynomial. And I'm going to set this, you can see just by choosing this, we went from 0.86 to 0.95. And I'm going to increase this to order number 3. Now we are at 0.9849, and I want to set the intercept to 0. Okay, so just by doing these things over here, I actually think it's even better, but I'm going to set this to 0. Okay, and I'm going to have these numbers over here. Okay, and you can see in the formula we have here 2 to the power of 2 to the power of 15 times x to the power of 3 minus 1. So we have all the equation over here. Okay, so what I want to do now, I just want to set this number to be a scientific number, and I want to have, let's say, 5 numbers after the comma. Okay, so I have these numbers over here, and basically what I did, I just copied these numbers and I just copy them and paste over here. Okay, because I know now these are the factors that are going to be multiplying each one of the orders or the polynomials in my equation. Okay, so that's basically what I did. So I took notes of these numbers over here, I copied them, and now we're going to go back to our Excel file, and I'm going to paste them over here. So let me just actually copy them, and I'm going to paste them over here. So here I have them. Okay, cool. So I have the numbers over here. And now, so how does it work? Let's gonna go back over here. So how does it work? Okay, I have the calculations over here. So let's say I want to find out what my regression line gives to the first period of the table over here. Basically what I have to do, I have to substitute. Let me make these numbers bigger. Okay, so basically what we have to do here, we have to get x and substitute it by 1. Okay, and we're gonna get the value for January 2017. And if I want to get the value for September 2024, I have to get and translate the x into the number of the period, okay? Which in this case here, if I select all the periods, so I'm going to go from here to here, we have 93 periods, okay? So that's what we have. So if I substitute here now x by 93 and add or make the calculation for this value, so I'm going to give here 93, it's going to give 672. Right, which is more or less where we are, right? So here we have 6.45, and our calculation is giving us 6.7, which is correct because our trend line is a bit above the actual number. Okay, so that's how you calculate this. Okay, you can see here, just multiply each one of the numbers to the correct values, and I get here. Okay, so now if I want to calculate where we are in January 2025, I know that September is the number 93, so just have to keep adding these things here until I get to 97 in January, okay? So if I want to calculate January 2025, I have to get this number here and substitute x for 97, sorry, okay? So back to our model. So what I did here, if I come to attack, you can see here that I have the regression correction factor, okay? And I set it to 96 because that represents December, okay? And now I can quite easily come back here and calculate the hash rate for January. And how we're gonna do it? So it's gonna be equals to this number multiplied by, and that you can see here I already named these cells. Okay, you can see I named this. Okay, so that's gonna go back over here. It's gonna be equals to what? This number multiplied by what? The regression correction factor. Okay, I already named that cell also. Plus what? Plus 1, because we're calculating for January. Instead of adding or hard coding plus 1, I'm gonna add the period over here. Just want to anchor properly over here. Okay, so that's it. To the power of 3, correct? Plus, we want to get this one here, multiplied by what? By the regression. Plus, oops, let me just move over. Plus this, F4 twice, close parentheses, to the power of 2, plus this value RF1 times the regression factor plus the period. Okay, so remember, this is 96 plus 1 is going to be 97. Close parentheses, add to the power of 1, so that doesn't really matter, right? So, and I have to divide all these things here. Let me see. I think it's to the power, divided by to the power of 18, because we have this in exa. So, sorry, just let me go here. It should be here. Because we have everything here. Which column is it? Yeah, that's correct. We have in exa hash per second, okay, to the power of 18. So now I want to just get this as comma 02, and also I want to check. So if, sorry, what's going on? Okay, so it should be if what? If this is true, then we do all of this. Otherwise, I want to return 0 because I don't want this number to show up whenever we retire or sell the unit, okay? And that's basically it. Let me get enter, copy and paste across, and here we go. Okay, so you can see now if you plot everything, you select everything and press Ctrl F1, you can see how we expect the hash rate of the network to grow over time. Okay, of course we know that's not really the case, and that's why I also left here this correction factor, okay, which we can use later on to make it like slightly correct the factor if need be. Okay, so what we can do now, I can just go, let's see, I can just go outside here and add what? I'm going to multiply by, sorry, open parenthesis 1 minus, let's say this number, F4. I'm going to close it. So let's say I want to reduce her by 10%, okay? So that was reduced by 10%. You can see, so Control Z, so it's 775 now. If I go back there, we have here 10% smaller number, okay? So just for us to give like a slight more granular calculation, okay? So I'm gonna leave it 0 for now, but we can play around with this factor because it's quite difficult to predict the growth, right? And as you can see here in the graph, that's gonna go over here. These things can go up and down, right? So if you zoom in, you can see that's really like over time, like over like this, we have like 1 year. It is really going back and forth, up and down. As you can see here, see, there's not really a growth here. The growth was very small, okay? I mean, 10% more or less, right? But still, you want to have more granular control by, and that's the reason why I add this correction factor over here. And for now, I'm going to leave it as 0, okay? Cool, so we got it done. Now we have to calculate what percentage of the network do we own, right? So I'm gonna say here that this is the, let me see, this is going to be our percentage, right? So currently how much do we have? We have here 700, not this one here, we have actually 806 tera, we have terahash per second, right? So how we calculate this? This is gonna be equals to the number that we have, divide by, I have to open parentheses, this, times million, because the difference between exa hash rate, which is the unit we have in row 21, and tera hash rate, which is the unit that we have, is a million times difference. So we copy and paste. Let me see if everything's correct here. Yes, it is. So basically what we can do, we can say it is a comma, and I'm just gonna add a few zeros after comma. There we go. Okay, and I'm gonna also multiply this by the flag, the operation flag, and now we copy and paste. Okay, I can do that. So what I'm gonna do, actually, I am going to do like this. I have to do an if conditions, so we get rid of that error. So this for twice, then okay. So if J5 is true, then we do the calculation, otherwise it's 0. Copy and paste across, and now we have everything here correctly. Okay, cool. So we have a very, very, very small percentage of the network. Okay, cool. So what are we gonna do next? Next, I'm gonna copy the formulas for you. I keep forgetting about this, so I hopefully I won't forget at the end of the video all the calculations. So I'm gonna copy here already, so I don't forget. So we're gonna have numbers here, here, here. I guess all these numbers over here and over here. So we're gonna leave it like this for now, and I can fix it later. Okay. So here we have everything. So now we're gonna see, okay, how much are we going to mine, right? So in total, we mined, the network gave us almost 14,000, but we only own this percentage of the network. So that's the amount we're going to be able to mine in this particular given month, okay? And I also want to multiply by the flag, copy and paste across, and here we go. Okay, so this is how much we mined. I want to copy, oh gosh, let's go. I want to paste here, 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 and here. Okay, so we have all the numbers. The only thing I want to make it a bit more visible. So we're going to be able to mine with this machine for the next 5 years or 6 months, 0.42 Bitcoin. Okay, now we have to come up with the Bitcoin after fees or mining fees. So we know that our mining fees is 2%, which is this number over here. So the calculation is going to be equals to what? Whatever we mined minus 2%. There we go. Copy and paste, and there we go. Okay, didn't anchor things properly, of course. So here we have to F4 one more, and here that's it. So copy and paste. Hopefully now everything's correctly, and I will just Control D to get the right amount. Okay, cool. So we mined 0.42, but we only get in our hands 0.41. So this is the one of the most important assumptions, right? Because that can change completely. Sorry, there is one here. Okay, the hash rate available on the network, because that's basically going to change and reduce our percentage of the network and how much you're going to be able to get out of it. Okay. So what is going to be our assumption now for the Bitcoin price, which is the other very important variable in this exercise we're doing, okay? The first thing, you're going to have an assumption for the Bitcoin price escalation, which is 1% per month. Okay, so I'm going to get here percent per month. Oops, sorry, should be here, percent per month. All right. So Bitcoin is gonna grow 1% per month. So how can we do it? We can say that equals if what? If this is 1, I want this number here just to be 1. Otherwise, I want this to be what? Let me open 1 plus this. I'm gonna press it for 3 times to the power of our period. I'm gonna press it for twice. Enter. What's missing here? I think it's missing comma 0, otherwise it's 0, right? So that's basically okay. Oh no, that was, oh okay, they fixed to me. Okay, there we go. Okay, copy and paste across. Let's see if that's correct. That seems to be correct. I just wanna now multiply by the flag. Let's see, copy and paste across, and there we go. Okay, cool. So Bitcoin is escalating over time, and if you go to the end of our model, we're going to see that we expect Bitcoin to be 82% more expensive by the end of the 5th year, which can be pretty low, right? So if you're bullish on Bitcoin, now let's say we are at 100K, 5 years, do we really expect to be at 180K? I think you expect to be a bit more, right? But let's going to leave like this for now. And now we can say, okay, Bitcoin price today is 86. Okay, and we can calculate now the Bitcoin price by multiplying this over this and copy and paste across, and here we go. So now we have the Bitcoin price for each one of the periods. All right, just want to make sure that whatever I'm calculating is correct. Okay, there's one error here. What I need to do, I need to say that this one here is whatever value minus 1. Okay, so if I do like this, basically I can get rid of this. Let me redo this formula here. I can get rid of this if condition actually, it can be this. Let me see, enter. I think this is a much better way to do, right? Yeah, now it's correct, right? So basically what I did here, Okay, I just said that we're gonna add to the power of whatever period we have here minus 1. Okay, because I wanted the first period that these numbers here returns 0. Anything to the power of 0 is the number itself. Okay, or it's 1 actually, sorry, it's 1. So in this one here, I want to distribute the first period to the power of 1. Okay, that's gonna give 1 plus 1%. Okay, so that's a much better way to calculate it. So I have to put the formula over here, and that's it. So I'm gonna save it, and we know now what is the price of Bitcoin for each one of the months. And with that in mind, we can calculate our profit, which is going to be whatever we have gained from mining times the Bitcoin price. Copy and paste across, and here we go, and we're good to go. So in the first month, we're gonna expect to make $1.3 thousand. Okay, cool. We calculated our revenue. What's going to be our cost now? So for now, we're only assuming that we're gonna have a cost for electricity. Okay, so we have escalation price for electricity, which is over here. It's 1% per month. So let's see how we're gonna do it. So this is a percent increase per year. Okay, so what we're gonna assume here that the electricity price is gonna grow a little bit every month, and the way you can calculate it is by getting the price of the electricity. I'm gonna press for 3 times and multiplying this by the percentage year. Okay, we're gonna copy and paste across, and we are good to go. So basically, that's how much we expect Bitcoin to, or the electricity price to grow every single month. Okay, we also have a price that we're going to start to calculate our electricity cost, which is 5 cents per kilowatt hour. And then basically we can say the same, equals if what? If this is 1, then we're going to have this value over here. Otherwise, it's going to be what's going to be this value, the previous value, plus whatever we have. It's going to be, sorry, it's wrong. It's going to be the previous value times what? 1 plus the escalation, and that's basically it. Otherwise, that's it, right? Yes, cool. So let's gonna copy and paste across. Yeah, we are increasing according to the previous month. Okay, so that should be correct. So we have the escalation of the electricity costs, and now we're gonna calculate the total costs in Bitcoin and USD. But for this, we need to get how much power we have on our mining. That's 11 kilowatts. So this is how much money we have in our mining. I don't think I need anything in here. So basically now we can calculate the electricity cost, which is going to be the total power times how many hours are we going to run this machine for in the period. So that's the information we have over here. So this is the kilowatt hour. And now we're going to multiply this by the cost of electricity. And there we go. So we're going to spend $415 per month. I just want to make this a negative number because that's a cost. Okay, so what's wrong here? I didn't anchor, right? So let's gonna go here, anchor, copy and paste. Okay, there we go. I just want to fix this. I just want to multiply this by the flag. Okay, cool. So we have the costs, and if I calculate this in BTC, it's going to be equals to whatever cost divided, not multiplied. So it's gonna be, let's go again, this divided by the BTC price. Right over here, I just want to make this a bit bigger. And now I copy and paste across. Okay. Yeah, so now I have to say if, because there is a div error, I have to check first whether this is an operation period. Okay. If it is, then we make the calculation. And if it's not, it returns 0. So I cannot only multiply by at the end for the flag. Okay. So I cannot do like I did here, where we just multiply by the flag in the end. We have to do an if condition first. Okay, so that's the difference. But here we have how much it costs us in Bitcoin to pay for the electricity costs. All right, so we have basically the revenue and we have the costs. What's coming next now? The returns. So let's gonna calculate the P&L first, or profit and loss. So how much money are we making? So let me see if we're gonna need all these formulas over here. Yeah, let's gonna leave like this for now. But what is our P&L or profit and loss for the period? It's gonna be equal to our revenue minus or plus in this case because the costs are already negative, minus our costs, which is this number over here. Cop, paste and copy across, and we have our expected revenue per period. And it's funny. Oh, funny, no, it's interesting because if you graph it, you can see our revenue goes down, down, and down, right? Which is happening right now. And one thing you need to check, okay, we're still making positive numbers at the end of the period, okay? All right, so that's it. We're still profitable, but making almost nothing. Should be not worth your time at the end. So we have to think about what to do with this. Okay, we're gonna do it later. But now we have our P&L. Okay, let's gonna calculate now like the first profitability calculation. Okay, so what is the cost of the mining? The cost of the mining or the miner is, where is it? $21,000. Okay, there we go. It is. I'm gonna multiply this by -1. Just want to check one thing here. Okay, that's correct. So that's the cost of our mining. Okay, if we're to pay in Bitcoin, how much that would have costed us? That would cost us the whatever we paid divided by the Bitcoin price, right? So that would cost us 0.25 Bitcoin. Okay, that would have been the price of our Bitcoin for mining if we're to pay in Bitcoin. Okay, that's good. So what I'm gonna do next here is, how much money have we come back with, or have we made if we were to buy this 0.25 Bitcoin 31st of December 2024 and sell it at the end of the 6 months period, right? So that would have been what? Would be equals to what? The amount of Bitcoin we paid, okay, and I have to multiply by -1 here because it's a negative, times what? Times the price of the Bitcoin, right? And the price of the Bitcoin is on row 30. Okay, and we would get the value on month 6, which is this month here, okay, which is the maximum value. Okay, so I can say for now, okay, that the maximum value, that's going to be multiplication of the max value on this row over here. Okay, and that works just because the Bitcoin price is just going up. Okay, if your Bitcoin price goes up and down, you have to use a lookup formula over here to look up for the 60 period, okay, and pick up this number over here. But we don't need to do it right now. Okay, what's wrong here? Why it's not showing up anything? Okay, there we go. So if you were to basically purchase the Bitcoin straight away, we would come back with $38,000. Okay, so that would have translated into a profit of $17,000. Okay, and how much is the return on our investment here? Okay, so it would be equal to this number divided by the Bitcoin price, or the machine, how much paid the machine, -1. Okay, so that would be our return. Okay, we would have made 79% return on our investment. Okay, which is pretty good, right? Let's say it's pretty good. And this is if you were to buy BTC. What if, oh, BTC, what if you were, oh gosh, BTC, what if you were to buy the miner? How much have we made? Interesting. Let's see. So how much we have made? So we would have to pay $21,000 and it would have made $19,000 back, right? So we would lose $1,600, right? So how much would be our return here? So I'm just gonna copy this, sorry, not this one here. So let me just go here. I wanna copy this over here. And what do you have to do? You have to go here, here, and here, right? Let me just do a bit different. So that is F4 here, right? So I don't need to return one, so it can be like this, right? I can copy and paste, sorry, I can copy and paste here, and basically we got the same number, right? So Ctrl Z. Okay, that's correct. So this is the correct way to do it, okay? So let me see, equals formula to text, and here we go. Okay, cool. So we have our return on investment. Okay, so clearly here you can see that the best way for us to go about it is to buy straight away Bitcoin, just hold it and make a 79% return on our investment. But is this really the case? Okay, what do you think? That's where we have to dig deeper and really understand about the nuances of our calculations. Okay, let's see if we can make it better. So now we have to consider that if you were to buy the miner, we would still have the miner with you or with us, right? And eventually we would be able to sell it, okay? And that's where having the residual value of the miner makes a lot of sense for us to calculate and understand how it works, okay? again, I never bought like a big mining or like invest a lot of money on mining, but have been watching the market for the market for the last few years. What I can tell you is the following. Okay, there's a lot of value in reselling your mines. Okay, and I think if I were about to really spend my time on it, I would have to purchase the best machines and sell them as long as a new one comes to the market. Okay, so the first thing for me to get into this market at all is to have access of the most efficient machines, or the new ones. Okay, so I'm always buying the new ones and reselling the ones that I have with me. Okay, and that's what I'm gonna try to calculate here and see how that really changes the business model. Okay, because when you look on these numbers here, it clearly doesn't make any sense, right? But that doesn't feel 100% correct to me. Otherwise, no one would be mining. Okay, even if we were to reduce our cost of electricity cost, that wouldn't make any sense. Okay, and again, I make the assumption that Bitcoin is going 1% per month, which would lead to $200,000 Bitcoin in 5 years. But if you're bullish on Bitcoin, I think you have a pretty much higher valuations for Bitcoin in the future, right? So let's see how that plays out. Okay, so if you remember previously, I set up here the loss of value of mining over time. Okay, so what does this table here does? It estimates the loss of the value of the mining over months. Okay, so between month 1 and 2, the mine is going to lose 0.5% of its value. Between month 3 and 9, it's going to lose 2.5, and so forth and so on. So what we're going to do here, we're going to do a lookup, and I'm going to plot these numbers over here. I'm going to say I equals to X lookup. All right, so lookup value, I want to look on the month. What's wrong here? Okay, yeah, there's an extra column, so month. Now we're going to look up array, it's this one here, and I have to press F4 to properly anchor it, and then I'm going to return this one right over here. What I have to do now, I have to make sure that we set these to -1 to exact match our next smaller item. Okay, and now we can close it. What that does, I'm going to show to you, that ensures that yeah, what is wrong here? Let's see, I think I got the wrong. Let's see what's wrong here. Should be, yeah, should be this one, right? Matching mode, -1. What's wrong here? Oh, I didn't anchor. Okay, so I have to anchor this thing here. It's anchor, copy, paste, and copy across. Here we go. Okay, so basically what is this -1 is doing here is make sure that whenever it finds a number that doesn't have on the table, it gets the smaller one, the one that is smaller than this. Okay, then it's gonna match against this one here. So on month 5 or 4, it's gonna match against month 3. Okay, and that's exactly what's happening here. Okay, so this is the loss of the value over time. All right, so let me just copy this formula. I will copy it over here, and we're gonna have values over here and over here too. Okay, so that's the formula. Let me gonna move this one above here so you can see what's going on. Okay, and also I'm gonna move this one here. I'm gonna move this over here so you can see what's in there. Okay, so yes, just pause the video and make sure you get these things right. All right, so I have it here. So now we can calculate the residual value at any given month. Okay, so first to start with, we have to bring the mining value. So it's $21,000 that we paid. What we're gonna do here, we're gonna say equals if this F4 twice is equals to 1. Then we're gonna return the original value. Otherwise, we're gonna return the previous month times 1 minus the reduction in value, right? That should be it. Enter. And I think I just have to multiply now by the operations flag and copy and paste across. Okay, cool. So you can see here that over time the machine is losing its value, right, until the point where it gets to value $400 basically. Okay, that's it. So what are we gonna do now? Let's gonna scroll down. We're gonna calculate now our returns if we're to consider the residual value of our machine. Okay, and what I want to find first is in which month I will have the maximum value of my Bitcoin plus miner. Okay, that's what I want to find now. So let's see how we can do it. Okay, The first thing I have to calculate then is the cumulative profit and loss. Okay, I'm gonna assume here that I'm gonna save all these profits over time. Okay, so how to do it? I am going to say that, let's do the following. I am gonna get to, first I'm gonna calculate, I'm gonna say that, let's see what's the profitability in Bitcoin. I'm gonna calculate it here because I don't have it here, right? So let's say here, what is the profit loss in Bitcoin? Control D, this is going to be BTC. Oh gosh, BTC. I'm gonna control D here. So what is the profitability in Bitcoin that we have here? It's gonna be basically what's gonna be this number plus this number over here. Okay, so we're gonna copy and paste. I'm going to add a few numbers after the comma. Right, the same here. So this is how much Bitcoins we have saved. Okay, so what I'm gonna say here is the following. Okay, I am going to assume that I'm gonna keep all the Bitcoins with me. Okay, and I'm gonna calculate the value of that amount of Bitcoins at the end of the period. Okay, so it's gonna be equals to what? Equals to the sum of this, comma this. Okay, you're gonna see how I'm gonna do it. Now I'm gonna click over here. I'm gonna fix. So basically what I'm doing here, I am accumulating these things over the months. Okay, so you're not seeing because there's no comma after 0. Okay, it's not really working. So what's going on here? I just have to, on this one here, I have to get this off. Okay, copy and paste. Let me see. So basically now, yeah, now it's working. I'm accumulating these values, right? And what I'm gonna do now, multiply by the Bitcoin price, which should be where? It should be over here. Okay, so that's basically what I'm doing here. So basically what we have here, it's showing how much money we would accumulate if we were to keep all the Bitcoin with us. Okay, and what I'm gonna do below here, I'm gonna say that the residual value of the miner is equals to this amount over here. I'm gonna copy and paste across. And what I'm gonna do here, I'm gonna add them together. Okay, and I'm gonna copy and paste across. Oops, no, copy and paste across. So what I want to find out now is when do I have the maximum value of both of the values, okay? And what we can do, basically, we can say that we can press Ctrl F1. And you can see here, right? So that we are going to have a maximum value over here. It's going to decrease, then it's going to keep increasing, okay? So what that basically is telling me is that I would be eventually, if there's a new machine at this point in time here, I would be much better off if I were to sell my machine over here, okay, which should be period 11, and then buy a new one, okay? So that is basically what this is telling me here, okay? So that's the strategy here. What are we gonna do now? We're gonna set up a strategy so we can sell this machine at some point in time before the 6 months period, okay? So let's see how to do it. Okay, so basically what I have to do now, what I want to do, let me just go back here and set up the graph again. I want to somehow capture this peak over here, okay? That's what I'm assuming was going to be the most valuable time for me to sell my machine and buy a new one. So the assumption here is the following, okay? Over the next, let's say 2 years, okay, there's going to be a more efficient machine on the market, which is a pretty reasonable assumption to be doing. And then by that time, I'm going to sell it and buy a new one, okay? So basically, I'm going to get rid of my machine and buy a new one, okay? So I'm going to exit my business or my investment on this particular machine, okay? So that's what I'm going to be doing. So how can we capture this thing over here, okay? So basically, I'm gonna delete here. I'm gonna add a row. I'm gonna say that the let's say the optimal lifetime miner. That's gonna say it's 24 months. 24 months. Okay, I'm gonna have this input over here for now. I'm gonna just make sure I can fix this. Let's say gonna select this 24 months. And now we can calculate. So it's going to be equals to what? It's going to be equals to the maximum of the first value over here. And then I have to have an offset here, guys. Offset. So I can do the offset. The reference is going to be over here. Then I have 0 rows, 0 columns, 0 height. And it's going to be the width of 24. Let me see if that's going to work. What's wrong here? Oh, 24. I think it's right. 24949. Where is it? It's not here. Where is it? Let's find, I think it's too late already. So where did you get it? Where is it? Here. So, oh, okay, month 11, right? So that's the maximum one. If I put 10 here, you should change the number. It did, okay? So let's put 24. Okay, so that's correct. So let's see what I did here. So basically what I'm telling here, I'm telling to calculate the maximum between the first and the 24th number in this range. Actually, I think I can even get rid of this. Yeah, it works, because what this offset's doing here is returning to me the range. I can show you over here. So if I put like this, it's just returning to me the range above. Okay, so that's exactly what it's doing. You see? So how does it work? So basically I get a reference and I say I want to know change in the rows. Okay, I could like offset the rows and the columns, and I can calculate how many heights I want. Okay, if I put 1 here or 2, okay, you can see what's going to happen. Okay, let's go back here. It's spilling over. Okay, but basically I'm saying, okay, I wanted the width to be of this offset to be 24. Okay, so that's basically what I'm doing here, and that's what it's calculating here. So that's a much simpler formula to have. Okay, so here we go. Let me say equals formula to text, and so you can see the formula over here. And now we're going to calculate how much we would be able to make out of this investment if we were to sell the business on month 11. Okay, so that's, I have to capture that as here. So actually here I should do a bit different. I should change this one here to this value over here. Okay, because that's what I want to know when there's something wrong here. What's returning? Yeah, but now it's wrong. Why? Oh, okay, I see. Okay, yeah, that doesn't work. So I have to go back once more. So basically, okay, so the maximum value is 24/7. So what I have to do, I have to match. I want to match this lookup value, lookup array, right? So I have to lookup array now. Let me see here. Okay, this is my lookup array. Should be 0. Let me see if that's gonna work now. I can explain to you. Okay, that's correct now. So what I'm doing here, so on the max offset, I'm getting what is the maximum value, and then now what the match does, basically match the max. Okay, it returns in which position this maximum value is, which is position number 11. So that's when we need to sell our miner now. Okay, so that's basically what I need. And basically what I'm gonna do here, I'm gonna say the capex for the miner, it is over here. So it's gonna be equals what? Equals, if this is equals 1, then we're gonna have this number over here. I'm gonna fix, otherwise it's gonna be 0. Okay, so this is the capex. So what do we have? F. Gosh, F. Close it. Now there we go. Copy and paste. Okay. So we have the money, the P&L. We have it over here. All right. Then what we're gonna do? We actually, I don't wanna. Yeah, let's gonna leave this for now. Okay, I can copy and paste across, and then I'm gonna have what is it? P&L, the total residual value of the money. So I'm gonna say equals if what? If this for twice is equals to this, then we're gonna grab this number over here, otherwise it's 0. Okay, copy and paste. So what's happening here, this here is wrong, should be times, should be if this for twice is equals or less than this number over here, right? So then we're gonna grab our revenue, otherwise it's 0 actually. So we just want to capture the revenue up to the month 11, right? Because that's when we're going to sell our machine. Okay, and this is going to be our cash flow. So it's going to be equals, copy and paste across, and this is our cash flow here. So I just want to go over here, copy, I just want to paste over here, I also want to paste over here, and here I want to copy and paste the formulas for you guys. Okay, so this is the cash flow that we have for this project. The assumption here is that not we're accumulating in Bitcoin, but we're getting the money back to our pockets. Okay, So that's what we are doing over here. Okay, what we can do now, we can calculate our IRR. It's going to be equals to the XIRR of the values. Okay, I have to start over here, comma, and then I'm going to grab the dates over here. I'm going to press enter. It's going to give us an error because I need here to be a negative number. It can be a really small one. Okay, there we go. So now we have a 21.35% return on this investment, okay? My question to you is it still worth to do it? We have 79% against 21%. What do you think? Well, actually, we're not comparing apples to apples because here we have IRR and here we have ROI, which is two different things, okay? So what we have to do now, we have to calculate the IRR for our returns if you were to buy and hold Bitcoin and sell it at the same time, okay? Again, one thing here is that like now we're assuming you're holding Bitcoin till the end of the 6 months, right? But here now we are only selling it on the 11th month, okay? But for the IRR of buy and hold Bitcoin, you can still calculate for the 6 months, okay? So I'm going to say if this is 1 equals to 1, then we are buying our machine, okay? And if it's not 1, if it is on this number here equals to this number here, okay? What are we doing? We're cashing out, right? So we're cashing out by how much? By this amount over here, okay? So that's basically what I do. So we're going to have two cash flows here. We're going to have an input, right? So we have, as you can see here, we have, let me just fix this. So we have first, we are getting invested 21,000, and then at the end of this 5 years, we are getting the money back. Okay, so this is our cash flows. I want to also copy and paste here. And now we can calculate the IRR for this investment. So basically I can copy this and I can paste this over here. Let me just say, I think I just have to bring this one down. Oh, the reference has gone missing because I didn't properly anchor it. So I'm going to copy anchor. And here we go. Now we have 12% returns, right? So here we have 20% returns and here we have 21% return. So you can see how the IRR really captures the value time, the money value over time, okay? The value of money over time, sorry. And now things really look really different, right? So on an IRR perspective, we would be much better by buying the miner and selling it and rebuying and reinvest, okay? Because that's the assumption of the IRR also, that we're going to be able to always reinvest the money and make the same return, okay? But if you were to buy and hold Bitcoin, your IRR is much lower because you only have a one cash flow coming back to you at the end of the 5 years period, okay? And that's the takeaway I would like you to have with you, okay? So from a ROI perspective, you feel really good. But from an IRR perspective, your investment looks much not so good, or it's not even better than buy the mine itself, okay? And that's the reason why a lot of people do mining, because they look at the IRR, not on the ROI, okay? So that's the most important takeaway for you. All right, so now I will just clean up a little bit the code. I'm going to delete these things over here. We don't really need because, sorry, let me just control Z here. We don't really need this. Essentially, these ones in here is the same calculation. It's the same calculation that I did over here. So we can get rid of this. And these we can just calculate the returns in Bitcoin. But we can skip it for now. And I'll just delete everything over here. Okay? So now we basically finished the second model. But there are a few more things that we can do to improve it or to make it more realistic, right? And the two things that we are forgetting here is basically tax. So we have to pay tax on whatever profit we get. And also we can start thinking as getting that to improve the returns of the investment, right? So if you think this has been a big like utility scale or commercial scale BTC farm, for sure you're going to be able to get some debt or get some sort of loans to purchase your units, okay? So that's what we're going to do next. So just before we move on to the next exercise or to the next financial analysis, I just deleted what I had previously below over here, and I added these lines over here. Okay, I just want to go through it and show to you how you should interpret the results that you're getting here. Okay, so in principle, I have here the purchase of Bitcoin. Okay, we have the RR, and then I have the cash flow for the Bitcoin over here. So let me just copy the formulas, and I'm gonna just paste them over here. All right, so we just have here the cash flows when you purchase the Bitcoin, hold and sell it, and here I have the cash flows for when you purchase the miner, mine Bitcoin, and sell the miner. Okay, so that's the two rows that I just added over here. So if you look on the IRR, just look in the IRR, what we have is that the purchase of the miner is basically 10 points or 10% points higher than the, or 9% higher than the purchase of BTC. Okay, so we have a 21.3% IRR on the purchase of the miner against 12.68. Okay, so clearly when you look in the IRR perspective, it's much better to purchase the miner. But when you look at the cash flow over here, you clearly see that your cash flow for purchasing the BTC and hold it is greater, at least or almost to a factor of 6. Okay, greater. You would have much more money if you were to hold on to the Bitcoin. Okay, so what's going on here? Why the results seems to have such different results, right? So on the RR, it would be much better by purchasing the miner, but on the cash flow itself, it would be much better by purchasing the Bitcoin. Okay, and the reason being is that the purchase of the Bitcoin, the assumption is that you would have to hold on to your BTC until the very last period of analysis, okay, which is period number 60. Okay, so that's the main difference between them. Okay, but the analysis is still valid. Okay, the BTC would return only 12% if you were to hold on for the full period. Okay, if you want to recalculate the purchase of BTC, what you can do here now, instead of calculating the returns of BTC on month 60, you could calculate the returns of your analysis if you were to hold your Bitcoin up to month 11. And your IRR for the BTC would be much, much, much lower. Or what you can do then, you can assume that you're going to be able to reinvest the cash that you're getting back here on month 11 and reinvest everything in the new miner, and you would be able to increase your cash flow. Okay. The interesting thing here, though, is that if you were able to reinvest, purchase the miner up to the time where you go to the 60 month, okay, you would still get the same IRR, considering that you would have the same assumptions. Okay, so that would be more or less the same IRR, but you would be able to increase your cash flow. Okay, so the takeaway from here is that basically you still get the 12% IRR on a 5 years period, but for you to keep growing your cash flow, you would have to reinvest the sale of the miner in 21 and keep accruing these cash flows or the revenues or the profitability of your business over time. Okay, so that's an important takeaway from here, and that's most likely what we're gonna do, right? So once you sell your machine, basically what you have to do, you have to purchase a new one and keep doing this over and over and over again in order to sustain a 21% IRR going forward. Okay, so that's basically how you should interpret it. So now let's gonna go to the third exercise. We're gonna add depreciation, debt, and tax. Okay, so let's gonna get started. All right, guys. So now we're gonna start the third cash flows calculation. Okay, and in this one here, we're gonna first come up with the cash flow available to equity and calculate the IRR, the sale of the miner, the early debt repayment, the principal, the interest, and the tax payment. Okay, so these are all considerations that you have to have in mind if you want to bring this financial model to a more like commercial-like business. Okay, so that's what we're gonna do. Then we're gonna have to calculate the debt, of course, the tax, and then the depreciation. So I have all the structure over here. Okay, and to do that, I also had to come up with some new structure in the inputs sheet, which is basically over here. Okay, so to start with, we're gonna assume we're gonna have that percentage. Let me change here to 25%. Okay, the interest rate at 5% per annum. We're going to be able to repay our debt in 25 months. And then I calculate here the equity needs, which is the minor cost times 1 minus the debt percentage. And the debt need is basically the minor cost times the debt percentage. This one here can also be the difference between the minor cost and the debt. It's the same thing, doesn't really matter. Okay, so these are the debt inputs. Then we have the tax rate, which I will consider 20% for this example. And lastly, we're going to come with the depreciation, which we're going to assume we're going to have a 60 months depreciation schedule on a straight line method. Okay, that basically means we're going to be able to depreciate the asset every month by 1.67%. So this is the whole structure. Now let's going to start modeling this. Okay, and the first thing that I'm going to create here, I'm going to create a flag only to check when we're going to make the sale, okay, or until which point that we're going to be operating this particular mining. So before, the assumption was that we would operate the asset for 60 months, but now we know that we're going to sell the miner a little bit earlier, okay, and we have done the calculations over here. Okay, so actually what I'm going to do here, I'm going to just change this to be a table. I'm going to say sale miner. So sale miner in months, right? So miner months. Can make this a little bit bigger, or let's gonna leave like this. Okay, so that's it. So what I'm gonna do here, we're gonna calculate this flag. So that's gonna be a pretty simple flag. It's gonna be if we have our operations is equals or less than this number, which represents the month we're gonna sell the miner, then it's gonna be true, otherwise it's gonna be false. So basically what we can do, we can just delete the if and just do like this. Okay, copy and paste across. Let's see if yeah, of course I screw up on this thing here. We should properly anchor. So now it's correct. Copy and paste, and here we go. Okay, so by the end of the 11th month, we're gonna make the sale of the asset. So after here, we no longer have the miner with us. Okay, so that's basically it. I'm going to scroll down. Now we're going to come up with the equity and debt investments. Okay, so as previously described on the input sheet, we have the debt and equity requirements, as well the tax and the depreciation. So I have all this information already plugged over here. Okay, just set these values to be equals to the equity and debt. The same one for the principal. I'm going to explain to you how I did this one here. For the interest payment, for the tax, for the depreciation. Okay, so I'm going to explain to you these two values over here later on. Let's going to go back and see how we can add these numbers over here. So our equity requirements, because this is an outflow of money from your pocket, I'm going to set these as a negative number. So we're going to say equals, if the operations is equals to 1, then I'm going to grab this number over here. I'm going to press it for 3 times, otherwise it's going to be 0. What is wrong? Yeah, there's an if missing, right? F, there we go. That should be okay. F, now I have to multiply by -1, and if I anchored everything properly, this should also be correct. Okay, and you can see the formula just by looking on column G. Okay, so now all the equity or all the requirements, the capital requirements for our project or for this miner is on row 80, which is just the sum of everything above. So I can copy and paste across, and here we go. Okay, so everything is correct. So we're going to have to come up with $16,000, and the remainder of this, the cash needs, is going to be financed through debt. Okay, so that's it. So here now I will calculate the cash flow to equity, or the cash flow available to equity. So it's going to be equals to what? It's going to be, first we have the equity investment, which is over here, is a negative number, so that's correct. Copy and paste across. Then we have our EBITDA, which is basically the revenue minus the cost in this case. So we also calculated that above. It should be this number over here on row 43. Okay, we're going to copy and paste this across later. The tax we have to come up with the same for everything else except for the miner's sale, right? Which we have done right over here. And it's a positive number because it's money coming to us, okay? So I can easily just copy and paste across. And now I just have to say this is going to be equals to everything above, copy and paste across. And here we have our initial structure, right? So as of now, we have, I have to copy this across, right? So we have the same thing that we had before, that we had calculated over here. But instead of having 21,000, we have $16,000 because that's how much equity now we're coming up with. Before, the assumption was that we're coming up with all the cash, but now we have that. But we have to add the tax, the interest, and the principal, and of course the early repayment of that here, if that will be the case. Okay, cool. Because we have here the cash flow available to the equity, we can basically calculate our IRR. So it's X IRR of, I'm going to do a bit different. I'm just going to say this is equals to this number above, copy and paste across. And the reason why I did it is because I need to have a very small number on the date of 31st of December, because that's when I'm evaluating the cash flows. Okay, so X IRR, I'm going to select the values, then I'm going to grab the dates. I'm going to anchor everything and enter. So for now, we have a cash flow of, or IRR of 142, which is not correct. Okay, there's one more thing we need to do here. Okay, if you notice here, we have the EBITDA running all the way through the month 60, but that's not the case, right? Because we're going to sell the asset, we're going to sell the miner before. Okay, so what I'm going to do, I'm going to multiply this by the flag above over here. Okay, and I'm going to copy and paste across. So now what we have is that we only account for the revenue that goes all the way through month 11. Okay, so now the RR has dropped to 80%, and it will drop a bit more, or a lot more, when we add the negative numbers coming to pay the tax, interest, and principal. Okay, let's move on now to calculate the interest, principal, and early repayment of the debt, because that's the easier part to do. Okay, so I'm going to scroll down, and here we have the whole infrastructure. Okay, so first we're going to have a debt account, right? So basically to keep track of how much money we owe the bank. And the way it works, we have an open and a closing balance, and we're going to calculate the additions of that, the principal repayment, and the early repayment. So how it works, we're going to say that the open balance of the period we are calculating is going to be equal to the closing balance of the previous period. So that's the way it works. And then the closing balance is equals to the sum of everything in this account. Okay, so we can copy and paste across. Okay, let me just clear this thing over here. I just want to clear everything, and I'm just going to copy above here. Okay, so the debt addition. So the debt addition, we're going to say that this is going to be equals to what? It's going to be equal to how much debt we are getting, and we have calculated that on the row 7 to 9. So we can copy and paste across, and here we go. But I wanted this to be a positive number, and the reason why that needs to be a positive, because whenever you have this type of accounts to follow, to track the balance of anything, you always want to have this as a positive. Okay, cool. So we have here, then we're going to have the debt repayment, and I have calculated here the monthly repayment. And how I did it, let me delete this. Okay, so the assumption is that we're going to repay this debt in 24 months, and we're going to repay the principal in equal amounts. So the only thing you have to do here, we're going to say equals. I'm going to go to the input sheet. Then I know that the total debt needs is this number on row 29, cell G29, and I'm going to divide it by the number of months. Okay, so that's going to give me the $223. Okay, and what we can do now, it's essentially say equals if what? If this number is equals or less than the number over here, then we're going to repay this, otherwise it's going to be 0. Right? But this needs to be a negative number, because this we are repaying, right? So it's money out of our pockets. So we're going to repay this, and here we go. And sure enough, if we add these two numbers together, it goes to 0. Okay. All right. But we also have the early repayment, right? So because what's happening here is the following: we have this. The assumption we have here is that we took this loan for 25 months. But we are reselling the assets on month 11. So the assumption that we're using, like we took the loan for this miner, so as soon as we sell it, we repay our debt. Okay. as you grow your business or as you improve the financial model, okay, one assumption that you can have that the company takes the loan. Okay, that's a little bit different than the approach we're taking in here. Okay, so if the company takes the loan, the thing you have to be able to is just to serve the thing that you have to be able to calculate is this to just to serve the debt. Okay, we can do this in a later video, but for now we're assuming that we are financing this particular minor. Okay, so here we go. And what we're going to do here, so if there is an early repayment, what we're going to do, we have to repay the debt, right? And what we're going to do, we're going to have to repay what? We're going to have to repay the sum of those values over here, which is the 2,900, right? So that's what we're going to have. So I'm going to say if equals if what? If this number is equals to what? Equals to the number of months over here, then we're going to pay the sum. Then we're going to pay the sum of all these numbers. Should we add? Yeah, should be everything. Otherwise, it's going to be 0. Okay, so, but that needs to be a negative. And here we go. So sure enough, we have 0. So we can just basically copy and paste everything across. Okay, and what's the problem over here? Yeah, the problem is that we also have to multiply this number here by the flag, right? So this should be multiplied by the flag. There's one over here, and I'm going to also multiply this one here by this flag. Okay, so I can copy and paste. I can copy everything and paste across, and here we go. Okay, so this goes to 0, and we are repaying our debt. Okay, good. Now we have just to calculate our interest. So how are we going to calculate the interest? Okay, so the assumption also that we're going to make is that we're going to take this debt on the first day of the month, okay, the first minute of the month, okay. So we're going to have to pay that from, we're going to have to pay our interest and principal on the first month already, okay. So how to do it? So we're going to say that our interest payment is going to be equals to what? 5%, which we have over here, but this is per year, right? It's 5% per year. So we have to translate first this percentage on a monthly period. We're going to get the number over here and multiply by the percentage of the year we have in this period, which is on row 6. Then what? Then we're going to say times the sum of times the sum of these two numbers over here. Okay, so that's basically it, and this should be a negative number, and here we go. Okay, so we're gonna pay in this period in this particular period $22 or $23. All right, so we have everything here, and everything is already correct, so we don't need to multiply by the flag for the minor sale because it's being paid. All the calculations are based on these values over here. Cool. So that's how much that we're gonna pay. All right, so I just want to see one thing here. That should be correct. Here we just have these numbers here for demonstration only. Okay, let me just demonstration only. They do not matter in this calculation. I just want to show you how much principal and interest we are paying. Okay, so that's the only thing, the only reason why it is in here. Okay, I'm so used to do this. It's not necessary in the model, but usually want to show this. Okay, cool. So we have finished that. So we can go over here and start plugging all those things over here. So actually what I'm going to do, I'm just going to bring this one here below here. Let me see if the calculation is still correct. No, it's not. So I just want to bring this one down here just to be in a logical order. That's something you also want to keep in mind in your model. You keeps things on the same order. Okay. So the interest, we can get the interest over here. The debt we can get, or the principal, we can get it over here. The early repayment we can get where we can get this over here. And that's basically it. So we can copy and paste everything across. And here we go. Okay, so everything has been calculated. And our IRR now is 26.16%. It's much lower than we used to have before. Cool. So now we are down to only calculating the tax, which is a bit more complex because we have to take into consideration the periods where you have a loss on your payable tax, okay? And that's what we're gonna do now, all right? So let's gonna calculate the tax. So our taxable income is gonna be the difference between the EBITDA minus the interest expense minus the depreciation, okay? So let's gonna start by calculating the EBITDA, which, as I previously discussed, it is the revenue minus cost, which is the number over here. And I also want to multiply by the flag for the minus sale. Okay, here we go. Then our taxable income is going to be equals to everything. So you can copy and paste everything across. Okay, so that's basically our taxable income. We're going to calculate the depreciation and the interest expense. And by the way, the interest expense we already have. So it's going to be equals to our interest expense, which is over here. So this is tax deductible. Okay, so there we go. So now we have to calculate the depreciation. So that's going to go down, right? So what are we going to have for our depreciation? We have this over here. So we're going to have a new account where the open balance is equals to the closed balance of the previous period, and the closing balance is equals to everything above it. Copy and paste across. Here we go. Then we're going to have the depreciation, which we're going to calculate over here. So how does the depreciation work? So the depreciation works that we're going to be able to depreciate the asset during 6 months at a 1.67% per month. Okay. So basically what I'm calculating here is how much I can depreciate the asset every single month, which is going to be equals to the percentage we just calculated over here times the minor cost, right? So that's basically the calculation I have, which gives us $358 per month. All right. So what are we going to do? How are we going to calculate the depreciation? So that's pretty straightforward. It's going to be equals to what? If this number here is less or equals to this one over here on F131, then we're going to grab this number, which is the depreciation per month, otherwise it's 0, right? And that also needs to be a negative. And I also want to multiply by the minor sale, right? I just want to calculate this for as long as we have the minor. Press it for twice. Now I'm going to copy and paste across. Okay. So what is going on here? So basically we are not able to depreciate the asset fully, right? So we're only depreciating out of the 21.5 thousand that we paid on it, which is the full price of the machine, which we have over here. We're only able to depreciate this amount here, which is 3,900. So we have to calculate this difference, okay? So there's two things we need to do here. So first we have to take into account how much is our machine still worth, what is the book value for our machine or for our miner, and how much are we selling this machine for, okay? And if we make a profit, we have to pay tax. If we make a loss, we can deduct tax. So that's what we're going to calculate now. So what I'm going to do, I am going to add here a addition, okay? So that's going to be how much we paid in this machine, which is over here. I want to have this as a positive number, so I'm multiplying by -1, copy and paste across, okay? Let me centralize it. So that's basically what we have, okay? Now we have to take into consideration the depreciation. So it's going to be equals to this number over here. Copy and paste. Okay, there we go. But you can see, let me just do one thing here. Just want to multiply this one by the flag over here. Copy and paste across. So basically what's happening here, at the end of the period when you sell the asset, when you sell the miner, we can still depreciate it by $17,500. Okay, so that's the book value of this machine. Okay, but how much did you sell this machine for? We sold it by 16,000. Okay, so we sold it for less than the machine is worth, and basically we make a loss on the value of this machine, so we can account for this loss. So basically I'm gonna add here the value for how much we sold the machine. So sale of asset or miner in this case, right? So that's what we're going to have over here. I'm going to copy. So where is the value? So the value is just over. We're going to grab the original one, this one here. Okay, so this is how much we're going to sell the machine for, right? In this case here, I want also to get this as a negative, right? Because we're going to reduce the book or the account that we have for our asset, right? So there we go. And now we still have 1,000. That's the loss that we're making, right? Because at the end of this period 11 here, basically what happens, we have to have a zero value for these calculations, okay, for this depreciation account. Why? Because we sold the machine. So this should come to zero, okay? And how we're going to do this? We're going to have to add what? We're going to have to add these values here. Actually, it should be the following, okay? So if, let's think how to do it. So it should be, if I have nothing in here, I should grab the number before, right? So let's say here, if this value above here is zero, meaning we did not sell the machine, so we have to grab this number here. Otherwise, what? Otherwise, we have to get the difference between the opening value and the sale value, okay? So that's what we have to do. So let me do here. So it's gonna be if this equals to zero, then we're gonna grab the number below. Otherwise, what? Otherwise, we're gonna get the sum of everything multiplied by -1. Let me see if this is correct. So let's gonna copy and paste across, and it is correct, right? So basically we're grabbing the number below here because we are depreciating the asset. But when it comes to the very last period where we are going to sell the asset, basically what happens, we're depreciating the difference of the value of the asset, which is 17,000, and by how much we sold the asset for, okay? So let's say we would have to sell this unit for $20,000, so it would be minus 20,000, right? So basically we would have to pay extra tax on this on the gain that we had. Okay, so we made $2,000, right, on this. Then we would have to pay this number. Okay, so that's basically what it means. So let me revert here. So that's what we have. So now that we have the depreciation, basically what we can do, can go above here, not under that, but should be over here, and grab the depreciation. So this number should be exactly the one over here. Okay, copy and paste, and be careful, that should be the number on row 129 and not in the one on row 133. Okay, should be this one over here. Okay, because we need to grab the write-offs. Okay, so here we go. So this is our taxable income, okay? But now we have to account for periods where our taxable income is negative, okay? Meaning that we don't pay any tax, because basically what it means is that, like, you make a loss, your revenue is going to be lower than your costs, so you should not be paying any sort of tax on this, okay? So what we're going to do now, we're going to calculate this tax loss account, so we can calculate how much tax we have to pay if we were to have a loss, okay? So as always, we have an open balance, exactly as we have here. I'm going to say equals to the above, right? And then we're going to copy and paste everything across. Okay, so here we go. So when are we going to generate loss? Okay, so we're going to generate loss whenever this number here is negative. So we can say, as we have in here, so you can see it's going to be equals to the min of 0 and minimum of 0 and the number above, right? So there we go. I'm going to copy and paste across, and here we go. So basically what we have here is that we have only account for tax loss generate once the value above is 0, okay? And I'm using this very elegant way to get it with a mean formula. But we need to get this as a positive because this is a tax loss account. We're carrying the balance of the tax loss, so we want to have this as a positive, okay? Now comes the part which is a little bit more trick, is when we're going to use it. Okay, so what I'm going to do here, I'm going to write here minus 500. So you can see I'm going to overwrite it, and I'm going to set this as yellow, so I know that I made some changes in here. Okay, so basically what we have to go now is we have to use this tax loss, right? So let's say we carried forward 500 in tax loss. So we have to net our taxable income against our value, or against our account of the tax loss. Okay, so basically because we made a taxable income of 400, let's say, but we have 500 carried forward, so we should not pay anything. Okay, so here we should net these things off. And how are we going to do it? So basically what we can do here, we're going to say that the tax loss utilized is going to be equals to the minimum of what? Of the number in here and this number over here. Okay, and I'm going to close it, and there we go. But I have to multiply this by -1. Okay, So that's it, right? So we made on this month, let's say 400, but we have with us in our account 500. So the net effect of whatever we made and we have is 111 or $100, and that's the one I'm gonna keep carrying forward, okay? Because I'm gonna net off my profit for the period against the tax loss carried forward, okay? So that's it. But there's one more thing that we have to do here too, okay? Which is that we can only do it in very certain situations. And I'm gonna show you how. Let me just copy and paste this across, okay? So what's happening here? Let's see if this is correct. So let's see. This is not correct, right? So there's something wrong here, right? So the only time where we can use the tax loss, of course, we cannot use here, right? So we can only use it if what? If this number here is greater than 0, right? So if number here is greater than 0, then we're going to use it. Otherwise, it's going to be 0. And I think that's correct. Let me copy and paste everything across. Yeah, and that should be correct, right? So if we made a profit, then we're gonna net it off our tax loss account. Otherwise, we don't, okay? And this is how you calculated it, okay? Cool. So now what I'm gonna do, I am gonna just copy and paste here to return back to what we have. And we only make a loss in the end of the period when what? When you sell our miner for a loss, okay? That's why we have this loss over here. In principle, you have to deal with it, okay? I'm not gonna do anything for now, okay? We're gonna leave with this in the financial model. We're gonna forget about this for now, but in principle, you should be able to reduce even further your tax. You should be able to deal with this on the next period, okay? But I'm gonna leave this for now open, and you can try to fix this on your own later on, okay? Cool. So what is our net tax income? So how do we calculate it? And I'm gonna write the formula over here, and then we're gonna explain. Okay, so it's gonna be equals to what? It's gonna be equals to this number plus this number over here, and I'm gonna close it. Okay, I'm gonna copy and paste across, and we're gonna explain to you how it works. So let me revert this back here to minus 500, and I am going to basically make it this yellow. Okay, so how it works? So I'm getting what? I'm getting the maximum of 0 or the sum of the two numbers here. Let's see why, okay? So if we have a positive number on our taxable income, we should not pay anything, okay? We should not utilize our loss, okay? Should not net it off our loss. And why is that? Because we have the condition in the very beginning that this number here should be greater than 0, okay? So that's what this is reflecting over here, okay? But whenever we have a negative number, okay, over here, we're gonna net that off, right? And we're gonna net that off by what? By the difference between, or it should be here, by the difference by the sum of the both of them, right? But because here we were able to net off everything, we don't pay anything. We still have some credits or still have value on our tax loss account. But in the next period, we did net it off, but now our taxable income is greater than the total amount that we have as an open balance in our tax account. So that's why we're still paying something, okay? And it keeps going forward, right? So now what we're gonna do, we're gonna multiply this number by our tax rate, which is over here, times -1, and then basically just have to copy and paste everything across. And of course, I did not anchor things properly. Now, if I copy and paste, here we go. So everything has been done correctly. And to finish our model, the only thing we have to do is to grab this number and bring them over here, our tax payable. So we're gonna go over here, say equals to this, and now we're gonna copy and paste across. Okay, and here we go. So we get to the conclusion that our project brings 20%, 20.5% IRR, which is almost identical to the IRR that we had before. But now we have it in a much more granular way we calculated it. Okay, it's much more granular, the calculation that we did. We're taking into account all the variables that a company should be taking into account, okay? And we're taking the advantage of leverage, okay? But what is the difference between this cash flow over here and this one over here, right? So this one over here. So essentially, we have a much lower equity that we have to disburse in the first period, okay? We also have lower cash flows for each one of the periods. And the reason being because we have to pay the principal, the interest, and tax, right? And we also have a lower cash flow in the end. But what makes the whole difference is the first month disbursement on the capex, right? The less you disburse, the more RR you're gonna get, okay? And I can start playing around. So what if you were to get not 25%, but 50% in tax or in debt, right? So your RR would even increase, okay? And if you were to get now, let's say 0, okay, you would have a lower RR than this one here because you are still paying tax, okay? So that would be the difference. The only difference between this cash flow here and this one over here is that we are paying tax now, okay? So that's it for today, guys. So this is the financial model that I came up with for the Bitcoin mining farm. I hope you have enjoyed. Please subscribe to the channel, give it a thumbs up, and let me know if you'd like to see anything else on this topic. Cheers, bye.